Hello and welcome to Business Today Television. I'm Siddharth Zarabi. With me, Robert Moritz, the Global Chairman of PwC, and Sanjeev Kishan, the Chairperson of PwC in India. Thank you very much, Bob, for being here. There's a very deep, extensive survey that you've done, the latest one. We spoke about that last year. And I want to get you to talk about what is stressing global CEOs this time around, because that's something that happens at the start of every year for the past few years, Bob.
Well, the good news is we've done this CEO survey for 27 years now, always launching it in Davos. What you find is three major themes coming out of this year. First and foremost, the sentiment of the CEO community on the economy. So we're actually a little bit more positive and a lot more pessimistic compared to previous year. And that's not surprising when you look at what I'll call the relative stability and less uncertainty that's in the macroeconomic environment right now. We can come on to that later. Second, though, is where they are really concerned. 45% of the CEOs say, I'm not sure my business is economically viable over the next 10 years unless I drive significant change to it. And this goes to the transformation agenda or the business reinvention agenda. And again, there's so many external factors of things changing and the pace of change that's impacting CEOs and their confidence level in that regard. And the third finding is that the two major drivers of that are all about AI and climate. And there's an interplay, interestingly enough, about both of those things where CEOs feel like they're taking some actions, but not as many actions as they need to keep pace with both the demand side, but also to turn the risk into an opportunity.
Bob, on the first point, what is the reason for CEOs being less stressed on the macro front? Is it because inflation, the worst seems to be behind us, the supply chain disruptions, and the conflict is broadly more or less absorbed in the planning?
Yeah, so a couple of things. I think it's a relative discussion.
Okay.
A year ago, we had rising interest rates, significantly rising pretty fast. No certainty in terms of whether it would stop, no certainty in terms of how high it would go, and how steep that curve would be. Today, things have tapered down a little bit, again, depending on what part of the world you're in, but for the most part, at a macro level, tapered down, a little bit more stability. And in some parts of the world, we're talking about, do we ease interest rates? Others are still talking about maybe rising interest rates. So the certainty and the relativity point in terms of what range are you in, much more easier than where we had significant uncertainty last year. Let's go to the other side, inflation more broadly. We had coming out of the war significant supply chain issues as you think about the impact to energy and other aspects like that. Food was another example. Talent was another example. We went through the Great Resignation and wages were continuing to rise significantly. And we don't see as much pressure, even though we still have a tighter labor market. So there's more certainty there. And you mentioned supply chain. Supply chain had a lot of uncertainty, particularly when you look at the major commodities because of the Ukrainian-Russian war, as well as the inflationary pressures associated with it. And again, we've got not only a relative stability, but also more optionality in it. So many organizations have said, I'm not going to have singularity into AYZ country. I'll have multiple choices now, and I've got that confidence level. So the amount of certainty is more so than what we had previously.
Okay. I'll come to the reinvention bit, the second one, but quickly for an India view. Do Indian CEOs, and there's a very extensive Indian component to the survey as well, have the same sort of views and concerns, or is it different?
So I think the good news coming from India is that Indian CEOs appear much more sanguine about their own ability to grow, not only in the next 3 years, but also in the next 12 months. And the numbers are 94% over a 3-year period, but 86% also over a 12-month period. Which means that they believe that India will do much better than the global somebody might tell us. The interesting thing also is, Bob mentioned, 45% CEOs concerned about their ability for the business to sustain over a 10-year period. Indian CEOs also think the same way. 38% of Indian CEOs also fear that unless they focus on business model reinvention, their businesses in their current shape and form may not exist. So in some ways, I think this is a theme which is consistent across the Indian CEOs as well as global CEOs currently, because I think the growth that India has experienced, because India is pivotal to all the 4 transitions that the world is facing, and India's, the ease of doing business getting better, services growth getting complemented by manufacturing growth. I think there's a lot of optimism. There's a lot of buoyancy in the minds of the Indian CEOs that they can actually do more for India, but also do more for the world. But I would say that the business model reinvention point is consistent with Indian CEOs as well.
Bob, you wanted to come in on that?
I did, actually. There's two very specific points where India is different than the global averages. First is the confidence level that they have in terms of its own country able to increase GDP. And again, that confidence level is very strong coming out of India, no surprise, based upon the underlying themes that Sanjeev just talked about. The second thing is the confidence level to raise revenues in the next 12 months. In fact, the majority of CEOs globally don't believe they're going to be able to do that. That's a shift from last year. They actually had more confidence last year, whereas Indian CEOs, very confident on that point this year. And it's not surprising when you look globally because you have a slowing economy. We have to acknowledge that, which is a little different than the nuances of India right now. And that's where the CEO community struggles with, do I have that same amount of confidence I can control my own destiny?
Bob, is India and Indian CEOs unique in this regard, or do you see this similar kind of confidence, perhaps not in same size economies, elsewhere in the globe?
I would say the two that stand out for the most part is India, and then the other two would be Southeast Asia broadly when you look at the underlying demographic trends, but not as high as the Indian CEO community. And the other one would be in the Middle East. Even with the geopolitical issues there, you see a high degree of confidence and a high degree in the economies that are sitting in the Middle East right now in terms of the upside potential for them.
A comment on China, is that possible for you?
So China definitely sees on a relative basis more upside potential compared to last year on their local GDP. They believe they've taken advantage of and have the right policies now to deal with the property market and other aspects like that. Their confidence level of raising revenues, not as strong as their confidence and ability to actually manage the reinvention risk. Because China's been dealing with that reinvention risk for a really long time already when you look at the macro things that have happened inside of China, but also what they've done similar to what India has done.
What is the reinvention risk for a majority of the polled CEOs? If you can kind of break it down in simple terms, and Sanjeev also step in on that after Bob.
Yeah, so what you see is sort of two big picture phenomenons. One is the amount of external change that's happening and how CEOs have to react to that. And that has impact on their strategy, it has impact on their execution, and can they actually keep pace with the demands that are needed, and do they have the right leadership and change management programs in place? Second is, can they control their own destiny? There's a lot of things happening in the world, and one of our major themes is control what you can control, scenario plan for everything else. Because there's a lot of things out there you can't control.
That's almost, that's from the Bhagavad Gita, actually.
Yes, exactly. So the two big ones is, in fact, this AI, generative AI play, the technology disruptions. This last year, we saw a tremendous amount of urgency and energy in the generative AI space and a big wake-up call for what that future world looks like. So 70-some-odd% of the CEOs see that as probably one of the biggest concerns or risks. Others see it as a risk, but also a big-time opportunity.
Yeah, Sanjeev.
So I would say that, when you look at technology and particularly sustainability, I think these are not things on which, it'll become night and day overnight. I think people and CEOs realize that, I think, in some cases, because, for instance, we are talking about 4 in 10 CEOs saying that they recognize that the decarbonization efforts will yield them lower revenues, lower margins, for instance. So I think this is going to be a long-term game. It's not going to be overnight, and there may be some amount of pain before there are gains. I mean, look at Indian CEOs, many of them who actually export particularly to Europe, with CBAM coming along, they recognize that there is no other way. They have to move in the journey to decarbonize and to make sure that the carbon component is going lower. The Indian government is actually putting a lot out when it comes to wind, when it comes to solar, and now also hydrogen and EVs and so on and so forth. So I think there's a lot of enablement which is there, but let's be honest, it's not going to be night and day. And the second one, just because I'm doing it doesn't help. My entire ecosystem, my entire supply chain, my vendors, they also need to be part of the journey, and possibly I need to help them come through that, because the financial muscle that I have, maybe they won't have.
Bob, I read somewhere that as far as AI is concerned, in terms of a business model, that's still work in progress. What is PwC doing to help clients and companies on this front? What kind of internal work and capabilities have you built in?
Yeah, so PwC, as you would expect, is on the forefront of this issue. And in order to be well positioned to do whatever we choose to do, you actually have to upskill your own people first. So we had to make sure that we had the right expertise coming in that have a focus on AI and generative AI. And then we cascade throughout the whole organization the upskilling necessary to use it, but also benefit from it. And it is the idea of using it and capture the upside potential. But you also have to remember that generative AI in particular right now is the bright, shiny new toy that everybody wants. And it's expensive, and you also have to think about, to Sanjeev's point, the climate implications, because there's a lot of energy and computing power that's needed to actually do these things. So that foundation has to be better set with resources and upskilling of your resources. Where we're focused is on three elements. One, how do we actually bring the expertise to our clients to think about how they adopt responsibly inside their organizations, effectively and efficiently, and get the most in terms of identifying, realizing and capturing the value proposition that comes from their businesses. And that might be different for a pharmaceutical company versus an insurance company. Second is embedding it in all we do. If I'm going to do an audit or a tax compliance project or an M&A transaction, how do you use AI to help affect the productivity as well as the quality of the service that you're actually doing as well? That's the second bucket. And the third is in our infrastructure. So if you think about what we do in human capital, what we do in our own IT organizations, how are we using that more effectively and efficiently to get bottom line capacity creation, and that investment of time and money can be then redeployed back into the business?
Okay, I want to ask you, and I think we spoke about this previously as well. How is PwC India contributing to the overall global PwC story, and how critical is the Indian operation in the global scheme of things?
Well, the Indian operation, as I think I said to you last year, continues to be one of the fastest growing regions in the world for PwC, thanks to what Sanjeev and the team are doing, and more importantly, the PwC brand being able to deliver value to our clientele. And that's the reality, because the change that Sanjeev talked about is tremendous in terms of the upside potential in India. Our job is to make sure we've got the right skills and resources and the right ability to bring that value and remain relevant to those clients. If that happens, then you've got the opportunity to serve. So if you serve well, then you have the opportunity for revenue, and you have the opportunity for growth of our own people. So it's very important to the stability of PwC. And when you look at it, there's sort of three angles. You've got India being one of the fastest growing economies and a major player today, and going to be even more important tomorrow. So our brand is made up of our brands locally. So we've got to be extremely strong there. So it's additive to the global brand. Number two is we actually have to focus on Indian organizations that are going global. And you're seeing more and more of that now. So not only are they focused on the domestic agenda, they're going global with their M&A activity and the like. So again, spending time and having the right resources there to be both impactful on Indian organizations going elsewhere, but also other organizations investing in India. And that's where we see a lot of trade flow, foreign direct investments and the like. And last but not least, you've got tremendous talent. How do you tap into the innovation, the talent, the R&D that's happening in India now that benefits the rest of the world? And where we see that is not where we go to market, but rather how we co-create with technology companies and other organizations in India to actually then sell and provide services, quality services to the rest of the world.
Absolutely, and that's a job that all of you do very well. Bob Moritz, thank you very much for your time. Sanjeev, thank you again. With that, it's a wrap on this conversation that we have had at Davos with the PwC top brass. If you've been, thank you very much for watching.